How is everybody doing? Welcome back to another episode of The Banker Next Door. I am your host, Dr. Joe Berquist. Today, I wanted to talk to everybody about Treasury Services. If you recalled, a couple of episodes that I've done over the last few weeks have been kind of tailored around deposit strategies, basically different things that banks can do to try to measure and perform better with their deposit gathering. One of the key pieces, though, that I did not hint on was Treasury Services. Many banks call this cash management or cash management services, cash management department, several different names for it, but it's all basically the same thing. So I came across a great article in Bank Director this week that basically talked about Treasury Services, and I want to bring that up and show that to everybody. So I'm going to go through this article, and then I'm going to talk about, I think, a number of kind of the key products that go into this. And how this can basically work as part of your strategy. So this article in Bank Director is called "The Growing Demand for Treasury Services in the Financial Sector: Economic Drivers and Implications for Deposit Growth. Treasury Management Services can help banks meet their obligations and optimize their financial performance by effectively managing cash flow, liquidity, and financial risk." So this was written by Alex Campbell. And let's see here. So it basically says, Treasury Services have become indispensable for businesses striving to maintain financial stability and growth. As economic trends evolve, the strategic value of these services has never been clearer. So what are some of the key components of treasury management? They can include four main things. Number one, efficiently managing the inflow and outflow of cash. Number two, ensuring the organization has enough liquidity to meet short-term obligations. Number three, identifying and mitigating financial risks such as currency fluctuations and interest rate changes. And finally, number four, making informed investment decisions to optimize returns on surplus funds. The growing demand for these services underscores their critical role in the relationship between businesses, banks, the broader economy, driving deposit growth and fortifying financial partnerships. So economic drivers behind the rising demand. Number one, you have technological advances. Number two, regulatory changes. Number three, globalization. And number four, economic uncertainty. And then implications for deposit growth. So as businesses engage more with Treasury Services, their banking relationships deepen, leading to increased deposits. So number one, enhanced cash management. Number two, increased deposits from investment services. Number three, banking relationships and retention. And number four, growth in deposit products. So one of the key strategies of trying to build deposits is cross-selling. In other words, the more products a customer has, the less likely they are going to be to switch. As we all know, it's far more expensive to acquire a new client than to keep an existing one. And how you keep an existing one is in part by offering them treasury, cash management products, treasury services, in order to deepen that relationship, provide them the type of products and services that they need. Make them happy. You grow your deposits. It's a win-win all the way around. Everybody's happy. So let's take and there's a good chart here that basically says which of the following will be top deposit priorities for your organization in 2024. So retail deposits. So basically, you have banks and credit unions. So for banks, retail deposits. Obviously, you can see credit unions a little bit bigger on that. Small business deposits, banks, definitely bigger on that. And then large commercial deposits, again, banks bigger on that as well. So, deposit priorities are shifting according to a Cornerstone Advisors survey conducted in the fourth quarter of 2023 and first quarter of 2024 that involved 359 community-based financial institution executives. The survey found that 63% of banks and 77% of credit unions prioritized retail deposits. 64% of banks and 53% of credit unions focus on small business deposits, and 50% of banks and 17% of credit unions prioritize large commercial deposits. This shift highlights the growing importance of Treasury Services in driving deposit growth across different segments. By offering comprehensive Treasury solutions, banks can enhance customer satisfaction and loyalty, leading to more stable and growing deposit bases. So key Treasury services to leverage. So to maximize the benefits of Treasury management, financial institutions should leverage the following key services. Number one, merchant and cash management services. That's basically streamlined payment processing, enhance cash flow management, and implement real-time fraud prevention tools to prevent fraud while ensuring timely payment processing. Positive Pay. Positive Pay is a great one out there right now. That is a great service for basically preventing fraudulent, specifically checks. Number two, liquidity manage. Enhance liquidity management by offering zero balance accounts to consolidate funds, optimize cash usage, and reduce fees. Additionally, an integrated payables and receivables solution can streamline account processing and boost operational efficiency. So here, analyze checking, sweep accounts. Those could be great ways. Obviously the analyze checking could help you basically, even though you're paying a fee for that, that can help you reduce money that can help you reduce fees in other areas. Offering kind of zero balance accounts to consolidate funds, i.e., sweep accounts. So, and then we have number three, business bill pay and investment services. So simplify the payment process with electronic bill management, scheduling, and recurring payments. Offer tailored investment management services to help businesses maximize their access cash and achieve financial goals. So ACH, recurring payments, scheduling and recurring payments. ACHs are big with that. Obviously, LOC, line of credit transfers, things of that nature. Being able to, do all that stuff online through the bank's online website, online platform. Number four, premium digital banking experience. Provide a comprehensive digital platform, embedded treasury services, mobile access, real-time transaction capabilities, as well as detailed transaction and activity reports. And then finally, number five is risk management and financial analytics. Offer tools for managing financial risk, such as hedging strategies for interest rate and foreign exchange exposures. Use advanced analytics and reporting to provide businesses with insights for informed decision-making and optimized financial strategies. Now, number five, unless you have a really big client, I'm talking probably like middle market type companies that are, 100 million plus in revenues. Unless you have that kind of business, or unless maybe you have a business that's doing a lot of buying and selling overseas, like maybe you got some kind of a food distribution company that's buying a lot of food in Italy and having it shipped back, and so they got to do a lot of wires and ACHs and currency exchanges and things like that. Maybe they need letters of credit, all that kind of jazz. So so I think the first four are the bigger ones that they're gonna really apply to probably 90% of the businesses that you're there. The merchant, cash management services, liquidity management, business bill pay and investment services, and your premium digital experience. So I think those are the four key ones to hit on. And then this basically concludes by saying growing demand for Treasury services is a response to economic uncertainty, technological innovation, regulatory changes, globalization, and fluctuating interest rates. Businesses recognize the strategic value of effective treasury management and optimizing financial operations and mitigating risks. Consequently, banks are evolving to offer advanced services tailored to meet the complex financial needs of their business clients. Yes, absolutely agree with that. And then just want to run back up here to the top for just a second. So I want to touch back on the implications for deposit growth just real quick. So number one, enhance cash management. So sophisticated cash management strategies require higher deposit balances. Number two is increase deposits from investment services. So treasury services include investment management, which leads to higher deposit volumes. Number three, banking relationships and retention. Advanced treasury services often result in businesses consolidating their banking relationships, increasing deposits with fewer institutions. And then number four, growth in deposit products. Banks develop new deposit products tailored to businesses engaged in treasury management, attracting more deposits. Yes, they do. So what are some of the key services here that you should be offering? Positive Pay. Again, fraud prevention. Lockbox is another big one. Sweep accounts, analyze checking, ACH. Being able to do wires online. Lines of credits. Remote deposit. That's for remote deposit for checks. So either if and most places basically have it where if you only have a few checks you have to go through every month, like maybe less than 25 checks, probably just do that over your phone, just, taking pictures with your cell phone and then just depositing in. But if you've got hundreds of checks every month, you need to get a remote check scanning system, which is just a cool little box that looks like the size of a telephone that just basically sits on your desk, and you just use it to scan all your checks in. Definitely remote check scanning. Payments, different types of payment channels out there, Zelle, maybe some other options that might be out there. Obviously, FedNow is coming, but it's not quite, I don't know. I don't think it's quite ready for prime time yet, but, what else am I thinking here? There's one other, we might cover the remote check deposit. I thought there was one other thing that I was missing there, but anyway, those are basically the main services that you want to get covered in here. But I think that treasury management is it's such an important part of your overall deposit strategy. You want to be incorporating these services into your deposit strategy. You want to get the existing clients that you already have. You want to cross-sell them. You want to deepen that relationship. You want to get them using more products, because that's making a customer, as you call, sticky. You're getting them in the bank, you're building that relationship. So hopefully, they're getting a lot of products and services that are going to help them just manage and grow their business. The bank's going to get more deposits, a deeper relationship, and hopefully a customer that's going to stick around for a long time. So I thought this was a really good article here on Treasury Services, i.e. cash management, some of the different products and stuff that they're there, and basically how that can help a bank tie into their deposit strategy to really be effective and grow in their deposit gathering needs, which obviously is their funding source for loans and keeps everything rolling. Because as they always say, deposits are the lifeblood of every bank. So, but anyway, I hope everyone enjoyed this episode. If you did, please make sure to like, share, and subscribe, as that always helps the channel. Please leave your comments down below. Remember, we are on YouTube, Rumble, and all major podcast platforms. Please check out some of the other episodes that I've posted up on the channel, as there's a lot of great content out there. And I hope to see everyone again real soon. Thank you so much.